Hi, I'm Max Keiser. This is the Keiser Report. Yeah, Time magazine finally recognizing what everybody else already knows. There's a global insurrection against banker occupation. Stacy Herbert, tell us more.
Well, Max, in order to talk about this story properly, I must have a little bit of this Keiser's GIABO soup. Now, this is a plain clothes sort of can here because, of course, you can't walk around New York City holding a can of Keiser's GIABO soup. So take a look at the artwork here of what the real can looks like.
Well, a lot of people don't realize it's actually alphabet soup, so you can spell out David Cameron is a schmuck while you're enjoying some hearty broth.
Well, it is the favorite soup of the SLA. I don't know if their photo made it into the actual Time magazine, but of course they are part of the spirit of what Time's Person of the Year, the protester. From the Arab Spring to Athens, from Occupy Wall Street to Moscow, a year after a Tunisian fruit vendor set himself ablaze, dissent has spread across the Middle East to Europe and the U.S., reshaping global politics and redefining people power.
Yes, people power is on the march. I think the arc of this whole movement is quite interesting. It goes back really 10 years, 12 years to the anti-globalization movement, which kind of petered out for lack of vision, but then it was resurrected as this global insurrection against banker occupation or Occupy Wall Street or the uprisings all across the Mideast and North Africa. Next year in 2012, we're going to see the economies of scale kick in. So all these millions, tens of millions, hundreds of millions of people around the world will realize that collectively their purchasing power, if channeled correctly, can topple these corporate and banker occupying forces, don't you think?
Yes, and Max, you know, the interesting thing watching this Time news story being covered here in the U.S. is that all the commentators, several of them actually came up to the point where they couldn't mention the name bankster. They couldn't. They talked about the dictators that were overthrown in the Middle East, and then they got to the Occupy Wall Street, and they just couldn't say the name of what it was. They couldn't name the culprit because it's like they are too scared of it really happening in their own country.
Right. The common theme throughout these countries are Wall Street and City of London banksters. Of course, you don't hear about it in the City of London or in America because this is the areas that provide safe harbor for these financial terrorists. So Time magazine, of course, they want to get the commercial uptick from spreading the meme of global insurrection against banker occupation. They want to sell some magazines, but they don't have the journalistic integrity to point the finger and say it's all about Goldman, J.P. Morgan, Barclays, HSBC, the true financial terrorists that people are finally figuring out must come down.
Well, of course, they have some photos of various protesters around the world, and they also have the clenched fist image. But they also have Luca, the GIABO dog that we called him in Athens. So I am inviting people out there to send me pictures of your own GIABO dog because I have one, Harry. Here's GIABO Harry. So we have to have these GIABO dogs, our little mascots, as we storm the bankster barricades of fraud.
Yes, well, that's a fantastic idea. Everyone must have their own riot dog.
Yes, well, actually, my GIABO dog, Harry, I showed him a sock puppet called John Corzine, and look what he did to it. He's a pretty brutal GIABO dog. In fact, Corzine is in the next headline. That's why I had to remove Harry from the room. Corzine knew MF used client funds, says Duffy. So MF Global Holdings Limited Chief Executive Officer John Corzine knew that the company made a loan out of segregated customer accounts before it went bankrupt. CME Group Incorporated Chairman Terrence Duffy told the Senate. Duffy, whose company is MF Global's regulator and principal exchange, is the one that said this.
Yes, well, it was becoming clear, Stacy Herbert, is that once anyone puts money into a bank, they no longer have the rights to that money. It's now the right of the bank to control any money in the bank. All of the protections for anyone who's putting money in any of these banks or brokerage firms are now gone. They're obliterated thanks to all the deregulation of the last 10 years, orchestrated by criminals like John Corzine.
But Max, the important bit about this testimony from Duffy is that John Corzine had only testified earlier in the day that he knew nothing about MF Global taking segregated funds.
Right. So they caught him lying under oath. Now, typically this would mean that there's some kind of penalties. But since this is a Wall Street crime, look for the Supreme Court to suddenly convene and rewrite all of the criminal code pertaining to this case, making this type of lying under oath legal for the benefit of national security.
Now, the trustee, James Giddens, is also quoted in this article because he told the Senate, "I don't think we're magically going to come to a pot of gold at the end of the rainbow, i.e. whether or not they'll ever find the client funds missing at $1.2 billion, he said, or more." He did say that both the Commodities Exchange Act and the Securities Investor Protection Act give a priority to customers, and if there is a shortfall, there are provisions in both statutes that say other assets ought to be reached to cover those shortfalls. He added, however, Max, and this is the important bit, that other parties may see that issue as a matter of conflict, i.e. JP Morgan and other creditors.
Right, this is the amazing thing. And going back to the Commodity Futures Modernization Act of 2000, where they legalized derivative trading. Before that, it was considered a form of gambling, but they legalized derivatives trading. It also gave banks that have huge derivatives positions, like JP Morgan, the ability to claim that those derivatives positions are existing outside or above any existing laws that would protect any current accounts by any customers. So derivatives, the things that have destroyed the global economy, are now preserved at the expense of all customer accounts. And since the notional value of derivatives is 10 times bigger than the global GDP, then every single customer account in every single bank account in the world is really nothing more than a blank piece of paper with a bunch of symbols on it, but it's not your money or your securities. No, no, no. Those are now on the ownership side of banks like JP Morgan, who have no compunction about simply stealing it for national security.
Well, speaking of stealing funds for national security purposes, MF Global cash at JP Morgan presumed its own so it can pay the bankruptcy trustees. So here you have James Giddens and JP Morgan negotiating basically to keep the $25.3 million in cash held at JP Morgan, which is presumed to be MF Global's. But JP Morgan apparently cut a deal with the trustee saying that they could have the cash if MF Global granted JP Morgan a lien on all of the company's assets.
Right, so JP Morgan is cutting deals outside of the legal framework. What's also amazing is that the silver that was in the MF Global collectively, all their 140,000 accounts, that quantity of silver disappeared from all those accounts, but now magically has appeared on JP Morgan's balance sheet. As you know, they're massively short silver. They've been scrambling for a way to cover their short position. Rumor has it that just a few weeks ago, COMEX was about to be busted, and JP Morgan technically would have to go bankrupt. So what did they do to prevent going bankrupt? And I've always said JP Morgan's like Enron. One day it'll wake up, it'll be worth zero. In order to stop that from happening 2 weeks ago, as it almost did 2 weeks ago, zero, JP Morgan's stock price, they went into MF Global accounts, 140,000 of them. They took the silver and other commodities and just stole them. That's their response to their criminality. And why do they get away with it? For national security.
There was a brief headline that they might possibly face consequences. I don't think it's real, but this is from Zero Hedge. JP Morgan's stock breaks down on news company's role as MF Global lender to be probed. So they post a picture of a Bloomberg headline of JP Morgan actions as MF lender likely to be probed, says liquidator. And as you see, there's a nice chart of the plunging JP Morgan share price. But the liquidator of the MF Global brokerage said that certain actions of JP Morgan, a lender to the broker's parents, are likely to be the subject of investigation. But Max, if you look at the stock chart, it fell less than 3%, whereas Goldman Sachs fell over 3% at the same time. So I think it's more of an issue of just the global financial system melting down, not that there's ever going to be any justice for Jamie Dimon or any of their role in the MF Global fraud.
Well, remember what happened over at Enron. A few people went to jail. One of the, I think it was the chairman, blew his brains out. So we have something to hope for. Let me just say that the word rehypothecation and hypothecation is going to be as important going forward as the word special purpose entity account. If you remember, Enron had over 700 special purpose entity accounts where they hid all the dead bodies of their balance sheet. We don't hear about those anymore. Now we hear about hypothecation and rehypothecation and infinite hypothecation through the bowels of the regulatory non-existent city of London. Of course, all leading to a JP Morgan stock price of 0. And then, if there's any justice, this, like Jeff Skilling, go to jail and the chairman will blow his brains out.
Now, speaking of bankers, Max, I have this headline here. Bankers cost each one of us £8.40 for every pound they produced, studies show. So bankers can today be exposed as a huge drain on society, costing the rest of us £8.40 for every pound they produce. A study by think tank, the New Economics Foundation, found the average banker destroys 42 million pounds a year in value while creating just 5 million pounds.
Well, absolutely. This is the biggest, revelation that must be shouted from rooftop to rooftop. It costs 7-8 times more in liabilities to keep these exotic pet banking fraudsters alive than any benefits accrued thereof. Not only don't they add any value and no jobs and no germane GDP growth, they suck it out of the economy at a ratio of 7 to 8 to 1. What do you call that's a financial cancer? That's not an industry.
Well, and this is why you have the global insurrection against banker occupation, because in the mainstream media, you just see the propaganda that enables these banksters. So the media will tell the population that, oh, this bankster deserves a £1 million bonus because he created £5 million in wealth. So he's just taking a share of his contribution to society. They failed to mention that in making that £5 million of value, he destroyed 42 million pounds. So they never talk about the externalities.
They never talk about the externalities, and this is what's causing the austerity to be imposed in places like the UK, which I just saw in the UK. People are now, the homeless rate is skyrocketing as well as the jobless rate. So thanks to Cameron and his klepto buddies in the City of London, people are dying in the streets. Now that's a real cost for bailing out real kleptomaniacs. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
All right, don't go away. Much more coming your way, so stay right there. Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to New York and speak with Leah McGrath Goodman, author of The Asylum, The Renegades Who Hijacked the World's Oil Market. Leah is also a journalist formerly with the Wall Street Journal. Leah, welcome back to the Keiser Report.
Welcome, Max. Happy holidays.
Thanks so much. Now, Leah, Time magazine has just named the protester the person of the year. The high price of oil, of course, contributed to global uprisings. Oil is still at $100 per barrel. OPEC says it's so high due to speculators. The IEA says it's due to supply constraints. So who is right in this debate? Is it the speculators driving the price up, or are we running out of oil?
Well, I think the IEA, they don't really have an axe to grind or an ass to save, as we say, in the sense that they're just looking at what the fundamentals seem to be. OPEC usually has a slightly more complicated situation because they want to keep oil prices as high as possible without any backlash. So for them to say it's the speculators is pretty convenient. I don't completely disagree with them having said that, but I believe they're both speaking to certain truths. I don't know if it's proper to spin it all the way one way or all the way another way.
All right, let's talk about the Strait of Hormuz, because now there's rumors that it may be closed. Obviously, on the rumor, the price spiked 3%. Do you see this as a viable risk going forward in the next couple of quarters? From what you're hearing, is this a rumor that has some legs to it? Is this going to happen, do you think?
I don't know. I can't speak to that. I do know that the Strait of Hormuz has long been the oldest trick in the book. Whenever they're trying to push prices up, they always say something about Hormuz. So I don't know if you can just based on the rumor itself is enough. I haven't heard anything beyond the rumor myself. And I don't know of any traders who felt strongly about it. In fact, yesterday when I spoke to a few of them, they're mostly laughing because this is an old rumor that's been in the market forever. They're always scared of something happening in Hormuz. And whether or not something's going to happen, I think remains to be seen.
Right, so the rumor had the result in the price spike of 3%, which is an enormous intraday move in any commodity. And after reading your book, The Asylum, talking about oil traders and a lot of the hijinks that goes on there, how much of these rumors are just put into the marketplace by traders and speculators as a way to scare the markets into making a quick buck?
Well, I think the structure of the market is such now that is very easy to do, whereas in the past, when you had the trading floor and then you had banks, hedge funds, and the like all trading from different locations, but they each had their own sort of pool of information, they would often circuit break each other. For example, someone would start a rumor and then the trading floor would run with it and then they would do a lot more investigating into it. I think because now it's moved largely to the screen, you don't have the same sort of giant groups of people who are able to share information with each other, which obviously had its own problems in the past because they were front-running prices. But now the problem is on the screen, a rumor can start and who's to say it's not true? You don't have the large group of people often in these trading pits, trading floors. You might have your office, but it's really everyone for himself. So if they hear a rumor, they're a lot less likely to be able to circuit break it really quickly the way they used to be in the past. In the past, they were pretty good at figuring out if it was something like a bank trying to start a story or if it was legitimate.
Okay, so if a trading firm has unlimited credit, unlimited margin, at almost zero cost, and they are able to program algorithmically automatic trading to kick in and force prices to move to levels where human beings then react, isn't it therefore true that most of the trading action today is by computer-generated rumors as a form of price propaganda to simply suck a lot of human beings into making silly decisions?
Well, it's true that most of the trading now is electronic, and as a result, as you know, it's easy to click your mouse. And one of the traders who I spoke to this week, he said, remember in the past, when prices went up, they would almost fight to go higher, and then they would fall fast. And he said these days what we're seeing is sort of the opposite effect with screen trading. You see the price jump up and fight to go down. And he said as a result, he actually feels that there is a lot more control over keeping prices propped up than in the past. When it was a different sort of market and the structure was different, it wasn't just clicking a mouse in order to pop the price. It was not as easy to do that. These days you see price jumps of $3 yesterday, $5, sometimes even $10. You don't even have a war that is breaking out or an oil well that's exploded, nothing like that. In the past, that's what it took to make prices do that.
Exactly. So it's no longer a case of price discovery, it's price propaganda. And as you just described, we don't have price discovery, which is the balance of buyers and sellers. We have computers predetermining the price at which they want a commodity to trade at to suck in a lot of stupid human beings. And then that price is fixed by computers who have access to unlimited credit at almost zero cost. Let's talk about another major fraud, MF Global, another major scandal. How do traders in New York, where you are, feel about being robbed by one of their own? Because now we've got interbroker dealer robbing other interbroker dealers. So the fraud is now moved up from retail to institutional. How do people feel about this in New York?
Yeah, it's funny. The same day that Occupy Wall Street had its big, sort of final rally, I guess you could say, they were having an Occupy Wall Street bankruptcy court situation going on with a bunch of former traders and people in the futures market who were finding all their assets frozen against them. So it is definitely an issue of more wealthy people versus more wealthy people, instead of the very lowly, unfortunate people versus rich people. So I think as you see people getting bolder, yes, it will move up the ladder. You'll start to see more of this happening. And the crux of this problem is our markets are still largely self-policing. You had the Chicago Mercantile Exchange policing MF Global, although they're making so much money off of MF Global. And now you have a situation where they weren't able to catch anything in time. It doesn't seem like the audits were very good. And yeah, you have these situations now where you have fairly wealthy people and hedge funds fighting to get money that was literally stolen from them by their broker. So, I mean, yeah, it's sort of a new world. I mean, one of the hedge fund managers I talked to said, let this be a lesson that if anybody takes your money, no one is going to help you. And right now, there's a big struggle trying to figure out who's going to be helped, if anybody.
Well, I mean, beyond learning a lesson from this, it points to an obvious problem in that the banks like JP Morgan feel that it's within their purview to simply take money out of people's accounts so that they don't suffer even a penny of loss, even though they're the ones who took the risk. So, and of course the defense from John Corzine and MF Global is that they're self-policing, so that the Congress will say in a hearing, well, you broke the law, and his defense is, well, we're self-policing. So where does that end? I mean, what does that mean? I mean, does that mean a mass murderer can go down into a 7-Eleven and gun down 30 people, and his defense can be, well, I'm self-policing, so therefore it doesn't matter? I guess that's where we're headed. Well, it'll be a lot less people to worry about in terms of welfare, because they'll be dead. All right, let's move forward. So tell us about the article you wrote for Forbes, The Boy Wonder of MF Global Nightmare.
Yeah, so, and this dovetails into what you were just saying. In 150 years of futures trading, we have never seen people who just had a brokerage account literally find their money taken from them. So this was one of those people. He's a 30-year-old lawyer, and he actually doesn't even practice law. He has a hedge fund that's set up. He's more of a self-described techno geek, so the hedge fund largely runs itself. He hires traders, and that's why he's able to go to bankruptcy court and take all this time to fight this. He was able to get about 8,000 followers within 2 weeks. Other people also had their money taken. And what he's doing is pulling together people at Northwestern Law, where he graduated, and a couple law firms that have MF Global clients, people also whose money was taken. And he's brought them all together, and they're basically working around the clock to show that customer money should not be lumped into the larger estate along with JP Morgan and other creditors. What some interests are trying to do, including JP Morgan, Bank of America, and a few of the people on the creditors committee, they're trying to let the customer funds be lumped in with everyone else, which isn't really fair because the customers didn't agree to lend money to MF Global. They thought that was their money, whereas JP Morgan is a creditor because it agreed to be a creditor. So this man, James Katoulis, is saying, no way, we should come first. This was literally taken from us. And the problem is the bankruptcy judge doesn't really know anything about futures. He's just a bankruptcy judge. This is just another case. He has to figure out whether or not he's going to allow super superiority to the creditors, to the customers, and that's all being debated right now. But there are a lot of people fighting, and you have hedge funds pitted against hedge funds, traders pitted against traders, banks pitted against banks.
All right, so Leah McGrath Goodman, what chance does he have against going up against JP Morgan and a trustee that has a close relationship to JP Morgan?
It's a real David and Goliath story, I think. Yeah, JP Morgan has given a lot of business to this law firm of James Giddens, the bankruptcy court trustee. And if you look at the law firm's website, it's just pages and pages of business from JP Morgan. So unfortunately, a trustee can't be really seen as neutral. Up in Chicago, you have the CME, whose former executive is now the head commissioner at the watchdog agency in Washington, the CFTC, trying to unravel and investigate what happened. But everyone seems to have too many hands and too many pots, too many conflicts of interest. And I don't think that's a good idea. It seems like almost no one here seems pure other than this 30-year-old lawyer who's just trying to get his money back and trying to make sure customers get their money back. They just want what's theirs back. They didn't ask for it to be taken. It'd be like if Bank of America went bankrupt and all of our bank accounts, just ordinary people's bank accounts, were taken. It's like that.
So let me get back to the oil for a second. The IEA said that production at current producing oil wells is declining at a rate of 7% a year, and that the newer sources of oil are more expensive. So we've got this peak oil, peak energy scenario playing out now. Your thoughts?
It seems like the International Energy Agency, they've never been right on every time, but I think there's something to be said that the major producing fields are producing less. We wouldn't have Horizon with deep water drilling, and we wouldn't have tar sands being exploited so heavily in shale if it wasn't that we were now scraping as hard as we could for every last bit of fossil fuels we can get. These things are very expensive, and you wouldn't be doing it if we still had low-hanging fruit, right? So we're obviously moving into a non-low-hanging fruit situation any way you want to spin it. That's obviously what's happening because the oil companies wouldn't pay so much more to do things like shale and things like tar sands if they didn't have to. They would rather just drill somewhere easy.
Well, the great thing about it, the fracking, which is another result of having peak oil, is that a lot of the water is actually flammable. So in recipes like Cherry's Jubilee Flambe, you can actually have the recipe explode spontaneously without actually having, to use anything but the water coming out of your tap. So you write a recipe book about flaming water, and I'm sure Oprah Winfrey will sell 1 million copies of that. So this is America genius at work. All right, well, Leah McGrath Goodman, that is all the time we have. Thanks so much for being on the Keiser Report.
Thanks for having me, Max. Happy holidays.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. And I want to thank my guest, Leah McGrath Goodman. You can follow us on Keiser Report at either Twitter or Facebook. You can send me an email, keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.